Good evening, everybody. And today's markets, I say today's markets, the market conditions are making investing fun right now. A lot different than what it was a few months ago. But the fact that we can see that the Dow is staying up above the T line, this is where kind of the analysis of what each individual signal represents gives you a much better feel for the direction of the market. Notice on the pullback, doji, doji, doji in the Dow. And at the same time, again, the NASDAQ just could not close below the T-line. So it's still in a nice uptrend. S&P 500 looks the same way. And even the transportation index that had been soggy at least popped back up to where they're back into the trend channel. So it'll be interesting to see what they do with this one tomorrow. But it doesn't really matter all that much because essentially what the markets are telling us is they're not selling off. And first criteria was that the market was getting better because of the Trump promises to cut taxes and make life for business that much better. But now it's pretty much, I think the statistic was this morning, that it was either 75 or 78% of all the reportings were beat expectations and 18% missed expectations. So that fact alone, or that statistic alone, just kind of keeps building investor confidence. On some of the futures, you can see what's happening to crude oil. Would still look for it to hit kind of the 200-day moving average, putting you right back up at the top of this trend channel. I don't think there's too much future for it breaking out to any big numbers because I think there's just too much crude oil around. Gold. Gold, you can see it's climbed right back up to the T-line, also in this kind of trend channel. So if it trades positive tomorrow, some of the biggies like Labu will continue higher. I would suspect Labu is in this wedge formation. All right, so we saw once we gapped up in the overbought area in the live cattle, and again, our alert was look how far away we are from the T-line, that it would come back down to the T-line. Right now, we are short July wheat. Very simple analysis on this one. But every time it hit the 200, they sold it off in this downtrend. Then we had a big evening star signal. And notice what they haven't been able to do. Get it back up above the T-line. Where's our target? Bottom right here, or bottom of this trend channel. I'm trying to think of what else. The dollar is kind of stuck in this this trend channel. Nothing to really trade there. So we did gold. I think else. All right. So the nugget still trying to break out, get up to this level. It did open above the 50-day moving average today, but came back down. Nothing yet, though, as a confirmed sell signal. However, we know that if it opens lower tomorrow, we've got kind of the bobble pattern. So if you're trading nugget, if it opens lower, you close it out, and then watch to see what it does off the T-line. Silver. Silver took a bounce back up. And notice how it did it off the bullish Harami Doji inverted hammer. So this is the type of chart And maybe this isn't the one to trade. Let's see what they... So where could this move up to? The 20, the 50, or put your Fibonacci retracement number on here. So it looks like the 38% retracement is right about the 20. Looks like the probably over the next few weeks, your 50 day moving average would move to the 50% retracement, and then your 62% retracement. Now, I don't use those to say, here's my targets. I use those are the potential targets. If we get up here and we see a shooting star and they start selling it off, that means they stopped at the 38% retracement. So just use them to see what everybody else is watching. Labu, I would suspect, again, would be coming to the top of this wedge formation. Let's draw that on here. Pretty much draw this wedge. That means this is where it's going to be trading. So if you're long, you stay long, but you watch a little bit more carefully when it gets up here. And then once it gets there, that's where you kind of evaluate whether there's a T-line crunch going through that level or not. So it's, yeah, at least you get a game plan to see where things might be moving to. All right, the biggies like Amazon. This is what I was showing in the options room today, is as long as you've got a trend like this and it's staying above the T-line, and notice where Amazon's trading. They haven't even been able to close it back below the 3T line. Apple, been a very nice uptrend. You can see how it picked up steam when they gapped it up out of the fry pan bottom. And what's our very simple analysis on this trend? You stay long until you see a sell signal or close below the T line. RB, if you'll email Abraham at candlestickforum.com, he can give you the details about the options room. And Tesla. Tesla did close just below the T-line today. That was probably a good place to close it out, because if they're back below the T-line with a doji gap down, stochastic's heading down, that tells you there's probably not very much bullish enthusiasm, especially with your doji gap down, your best friend, number one. Number two, look where it occurred, right here at this top. So it's telling you, you probably want to be out of Tesla for a while until you see a strong buy signal and they close back up above the T-line. Netflix, ever since they did the best friend, I'll make these bigger. Best friend, gap up through the resistance level, same scenario, very simple trend analysis. You stay long until you see a sell signal to close back below the T-line. Lori, I'm pretty sure you're going to see positive and negative articles on Tesla for years. Some people think it's the best thing since sliced bread. Other people think it's way, way overpriced. So that's why I don't listen to any one source. I let the market tell me what the market is doing. Okay. Unfortunately, I say unfortunately, trying to find the best trade positions, most of them are the ones that we're already in. And again, this is a this is the whole reason to use candlesticks, is we're trying to find things that are telling us where things are moving in the right direction. Our recommendation on AKBA today had no earthly idea what was going on in the background. All we could see was that the J-hook pattern was in progress. And apparently, after closed today after hours. They announced a approval of one of their products, and it was trading up here. Not that we knew that it was going to do that, but when you see a pattern like that, and you can see that there is a nice J-hook pattern, it still puts you in the situation where you're being placed in the right place at the right time. So that's going to be a good one tomorrow. LPSN. There's your big fry pan bottom. There was your best friend gap up. We're just staying long until we see a sell signal. Now remember, the further away you move from the T line, the higher the probability you're going to start seeing some profit taking. Same scenario on VRX, fry pan bottom, kicker signal breakout. Staying long until we see a sell signal. These big gap ups, again, just puts you in situations where it kind of gets you past your, or my, I say your in a general sense. I used to say, I don't want to buy a stock that's up that much. Man, I'll slam it right back down. Now that I know this is a best friend signal breaking out, like in NVIDIA, yeah, you just stay long. So that gap up from a inverted hammer doji, this is a SGMO, also a breakout through kind of the trend channel, moving you into much higher territory. So we're still getting ready for this weekend, going through an extensive training on how to use the T-line. After that, one of the statistical studies I'm going to do is when you see those big gap ups, I'm going to see what the probabilities are if you see it open positive the next day after that big move versus a pullback. So we're going to kind of do a statistical study on which ones perform and which ones perform the best. CC, another one that just kind of was riding along the T-line, nice steady uptrend. Roger, your best friend, the reason we call it a best friend is because when you see a doji followed by a gap up, call it your best friend because not only are you going to be in an uptrend, but you're going to be probably in a very strong uptrend. So the probabilities are extremely strong that you're going to be in a strong uptrend or in an uptrend, and the magnitude of that trend is usually very strong. So I've done, we're still getting ready to put out our video training set on candlestick signals and patterns quantified. We've done it before, just kind of in the Cliff Note version. Now it's going to be a 4-hour video training, maybe not 4 hours, 3 hours of video training showing which signals and patterns work the best and why they work the best. There's your best friend right now on this one. Doji Gap Up, GWRE. I would suspect your next target is up here at the top of that channel. So the best friend is just a very powerful signal combination. Another one right here. First of all, you had a gap up here. You had another gap up here. This is BBRY. You almost came out of it yesterday had it not closed as a doji, because what's our simple rule of the doji? It's going to move in the direction of how they open it after a doji. So if they'd opened this one lower today, we'd have closed out the position. The fact that they did a doji gap up tells us there's probably some new life in this one. We just continue to hold until we see a candlestick sell signal and a close below the T line. NEWR, we're watching this because notice what's happened up here in the oversold area. I'm sorry, overbought area. We're starting to get some exuberant buying. So we're going to be a little bit more nimble as far as placing our stops. At this point, if it opens positive and trades positive tomorrow, we immediately put our stop at today's open. If it continues higher, we then move our stop up to that day's open. Okay, okay, yeah, I try to not say this one. So this one is NEWR, which we've been in for a while. Going down the list here. Shopify, well, SHOP, same scenario. We've been in and out of this one, and every time we come out, we get right back in if it does a buy signal, like a Morningstar signal. So this one now has gotten up into the 90s, and there's one very simple rule that if you hit 90, more than likely you're going to hit 100. And that's just because everybody likes the round number. BRKS, again, these are all positions we're in right now because there aren't too many charts out there that are better than the ones we've already got. So this is kind of the advantage of knowing what the signals and patterns should be producing. Notice the fry pan bottom and the J-hook pattern on BRKS, Brooks Automation. You just stay long on this one. If this is wave 1, wave 3 should take you up into about the $31 area. Light, gap up, inverted hammer type signal. Very simple entry on this type of trade. The stochastic's not anywhere near the overbought area. They gap it up, profit taking. If they open up positive the next day, you can be buying immediately because that tells you the profit taking's over. This gap up tells you there's probably going to be more upside. Where's our first target? Right here. It closed at 54, 55. We've got the spreads, the May spreads on this one where we bought the 50, 55 spread for $1.90. More than likely over the next couple of days we will be able to come out at the maximum of $5. AXTI, another slow curve, fry pan bottom, J-hook pattern. Wouldn't be afraid to be buying this one on positive trading tomorrow. MNTA, same scenario, fry pan bottom, J-hook pattern. You want to be ready to buy this one. Probably anything above 15 or 16, I would tell you wave 1, wave 3. This is why we call this the classic, because usually out of a fry pan bottom you get a strong price move, and the prerequisite for a J-hook pattern is a very strong price move. XENT. You can see that one setting up. Fry pan bottom, strong price move, pulled back, and look where it pulled back to. Right back to the T-line. So you can be buying this one. If you're aggressive, you can be buying this one on positive trading. You just want to watch to see what it does here. If it breaks through here, more conservatively, you can be buying it up here. At any point, if we can see this is a fry pan bottom and it's starting up, maybe it's not big enough for from here to get in. You're more apt to get in it coming out or when it breaks out. There'll be other situations, and I'm trying to think, where let's say you right down here, and I'm just going to pick out a number. Let's say you're down here. If you were buying, you could see how it was setting up, and you saw the resistance level was up here, and I'm going to just say 10, 12, 15% higher than where you're getting in. Yeah, 10, 12, 15% return on a pattern that has high probabilities of coming up here. But if it failed, all right, you still made a decent percentage. Now, if this was only a 3% move to get up here, I wouldn't be so anxious to jump in. But you can see what happened right at the beginning of the fry pan bottom and the 200-day moving average coinciding. As soon as they broke through that on a slow curve, that told you probably had a fry pan bottom breakout. I'll try to find a flutter kicker again here. A flutter kicker is a kicker signal with a doji in between. I'll try to find one. I'm sure we have. some Medtronics, same scenario, fry pan bottom. So up here, if we had been long, what did we want to see at the breakout level? We wanted to see a good, strong breakout. The fact that they did a bearish Harame told us exactly what was happening. The buying had stopped. You close out the position and wait for the next pattern setup, as we're seeing right now, kind of three white soldiers. This one you can still be buying on positive trading, anticipating wave 1 and wave 3 will be about the same, which also would kind of coincide with that, the trajectory of the trend prior to the pullback. TVPT, this is your classic Bobble pattern. Came right up, strong signal, morning or bullish Harame confirmed, came right up and hit the 200-day moving average, took profits, where you would have taken profits. Then notice what it couldn't do. They couldn't close this below the T line and gapped it back up through. So that's the Bobble, which is basically a J-hook pattern that's more definable. We could see where the selling was. We could see the T line was not letting them sell any further. And then they gapped up through this. And that what was our simple rule, that if we saw something like this, that if they opened it positive the next day, I mean, they have finished taking their profits. So right now you'd stay long. What's your target on this one? Wave 1 and wave 3 will probably be the same. Let's see. XLNX. Kind of the same scenario. Gap up, gap up. What couldn't they not do here? They've never been able to close this back below the T line. You just stay long. Now, if you want to be buying this one, wait for this. Whoa, Shaw. Wait for this breakout right here. And KRNT is a good example of a belt hold where they gapped it down, brought it right back up, and now where are they? They're back up above the T line. So what did this basically tell us? It told us that they took out a lot of sellers. When they take out a lot of sellers, that means there's less sellers in the way, that your uptrend is in progress. And that same scenario, we were discussing this in the chat room today. Somebody was worried about the little tails to the upside might be showing weakness. The true signal is, or the true pattern is, the J-hook pattern. Again, look what happened right here. Kind of a belt hold. They couldn't close it below the T line. Another big doji day. Couldn't close it below the T line. I would definitely be a buyer of this one on positive trading, figuring if this was about a 12-point move, you're probably heading to the $66 area. Bunch of other ones that have just got simple patterns. Here's Cena, wave 1, wave 2. Notice what happened on the pullback. Bounced right up off the T line in wave 3. IDT, this is why you want to know what your signals are telling you. We knew when we bought this, our first target was going to be up here at the 200-day moving average. Now we've got a shooting star doji right here at the 200. This makes it very simple. If they open it lower, you're probably in a bobble. You take your profits. If they open it positive, you stay long, but then you just set your stop right here. That if they open it positive and are able to trade it off, that tells you you've now probably got a bearish engulfing after a doji or your left-right combo. And that was IDT. All right, that's where I am. LNTH, observe the obvious. Fry pan bottom. And where does it break out? Right here, the big volume. Consolidated and then came right back up again. So what's our simple rule of a fry pan bottom breakout? You just stay long as it doesn't close below the T line. FMSA, fry pan bottom. There's your dimple, which meant from here to here was going to be about the same equivalent from here to here. Now we're just watching to see what it does once it gets to the 50-day moving average. Kind of the same type of chart pattern on CDE, another mining company. Morningstar signal. Notice it didn't confirm. That's where it confirmed. Or if you weren't excited about buying it then, we already knew we had a strong Morningstar signal. We could also see that they bounced one more time off the 50, closed above the T line, and the simple doji rule was if it opened positive, it was going to trade positive, making this pattern much more clear to identify and telling us our next target probably is up here. Again, a wave 1, wave 2, starting with a strong reversal signal going into wave 3. Oh, I've scribbled so many. The problem with trying to find something new is that, again, here's MGM. Same scenario, J-hook pattern. There's your little dimple right there. I'd be a buyer of this one on positive trading tomorrow. On Caesars, kind of the same scenario. J-hook pattern. Did kind of a doji sandwich today. So there's your classic fry pan bottom J-hook pattern. So why are we showing so many of these right now? Because there's plenty of these right now. And the advantage, again, of going into a candlestick pattern is that even if the market is moving up slowly, you're not buying something that's moving slowly. You're buying something that has a pattern that's telling you there's going to be a lot more strength to the upside based upon pattern results. RES, kind of a little T-line crunch, gap up. Wouldn't be afraid to be buying this one because this gap up told us this downtrending channel has been breached. A lot of juice left in the stochastic. And E-mini, good to have you here. Let's see. RXDX. Kicker signal off the 50. Well, I'm sorry, off the 200. First target is likely the 50. And then the fact that they get a kicker signal through the T-line probably tells you there's probably going to be, and this much room left in the stochastics, probably is a good indication that the 50 is not going to be the resistance level. NPTN, pull back, the Bobble breakout, next target should be up here at the 200-day moving average. Now, if I look at a chart like this, and this move from here to here was 4%, yeah, you got a good chart, but not something to make money. If I'm buying right here and it could go to here, that looks more like a 35% upside. That's worthwhile. Big fry pan bottom. The chat room today was discussing this one. It was waffling around, and I'm pretty sure by the end of the day the volume was good. So you can see the fry pan bottom. You can see what would happen if they break out through this level into the gap area, which is a good prospect. You got a likelihood you could be up here with a big percentage move. And I'm pretty sure by the end of the day there was enough volume in this one to say it was worth shooting for if you like the small price stocks. This is your best friend signal. Doji, hammer, gap up through the resistance level. Again, this gets rid of that hesitation to say, oh man, this stock's already up 10, 20, 15, 40%. There's usually going to be a lot more upside. Just a simple rule of candlestick analysis is that So the bigger the signal, the higher the probability things are working out, or it's going to move in that direction. Fry pan bottom, big bullish engulfing, doji sandwich, easy target 200-day moving average. And not too many. Let's see. Oh, KORS was a short in the sense that you drew a trend kind of right through the bottoms. It broke down through that level. So this could be wave 1, wave 2, going into wave 3. Yeah, hold on to your individual ones, John. I know, and just because DDD also was a fry pan bottom breakout, there was your kind of your morning star signal. You just stay long. Now, this is kind of the things that we learned using the T line as a reference or as a support level. The further away you move from the T line, the higher the probability it's going to come back and test it. So tomorrow, if it opens positive, my first place I'd have a stop is right here at today's open. If it slammed down, I want to stop out. On the other hand, if they take it up, notice how we're getting further and further away from the T line. I'd move my stop up to the open. Wouldn't want to see it come back down through that level. Or, as we did in our live cattle trade, if this gapped open, then you get ready to take profits. And I have a lot of people asking about that trade. So we bought live cattle right here as the doji was breached, and you had the J hook pattern. Then you can see it was up the limit about 4, 5, 6 days, and then they gapped it up. So at this point, which is the same thing we were just looking at on DDD. Nope, that's not DDD, that's DD. Same alert that we're looking at right now is you got a nice strong pattern. You're moving away from the T line. So we have our strategy set up if we own this. Stop right here. If it opens positive and starts trading positive, we move our stop up to that open. And if it moves way up here, then you flip to your 10-minute chart, which is exactly the process for if it gapped open, they extended the limit on live cattle. It's usually 30 cents. They went to 45 cents. So we already had our strategy. If it opened lower, we're going to take profits. If it opened higher, we put our stop right here. If it gapped open, that means we really got ready to take profits. So on our 10-minute chart, see if I can find, on our 10-minute chart on that day, it gapped up and it was butting its head up at the limit. Couldn't go any higher. But we already knew it gapped up, so there was two things that are going to happen. One, they just kept pushing it against the upper limit all day long. That was good. That means they were probably going to open it higher. If they started selling it off, that's exactly what we'd expect after gapping up in the overbought area. We just put our stop right here. So we were out at this point instead of waiting for the sell signal to complete on the daily chart. We already had the alert to tell us that if they gapped up, get ready to start taking profits. That was a good trade. But that's where you swing to your 10-minute chart or your shorter time frame to get a much better view of what's happening, even though you don't have a daily candlestick signal. Workday, another one that had a fry pan bottom, J-hook pattern, probably going to go higher, same magnitude as this right here. So when I say it's probably going to go higher, that gives option traders, especially on a $95 stock, things to set up for, that they might be doing a 97.5 to 102.5 spread. You might be doing a spread which would be much more feasible than just buying calls outright. Except I did buy calls outright on something, and I forget what it was. I'll come across it. CNAT is another one of those examples of, notice you started getting sell signals up here, and then you had a strong sell signal and a close below the T line. That tells you it's time to go short. Now you're down here in the oversold area, and you're starting to see dojis. That gives you at least a game plan. If they start trading this positive tomorrow, you probably want to close out your short position. What's the worst case scenario? You cover your short and then put a sell stop right here. If it comes back down through there, they're still selling it off, probably heading to the 200-day moving average. So each chart, based upon the signals, that's not it. Based upon the signals and patterns, just give you much more clarity of when to be getting in. Let's see. Is there a best friend signal? Would you buy on the same day, towards the end of the day, knowing it's trading near the top? Or will you wait till the next day if trade's positive? That's a 50-50 kind of, let me say, analysis. First of all, if I saw this gap up, start trading positive, but the Dow was down 120 points, yeah, I'd probably wait for the to see if it was going to finish out. If the Dow was trading up 60 points and this gapped open, I'd probably be buying it immediately. In the worst case scenario, I might be buying a half a position here and another half a position up here. Oh, is everybody getting a lag in the in their charts? Let's see. NETN. I think we did this one. But again, there's the Bobble pattern. So the thing that should benefit everybody the most is knowing what patterns to look for, what human nature does time after time, and then being able to take advantage of those much quicker. So if I was watching this and I said, all right, I'm looking for the Bobble breakout and I saw it gap open, I'm buying right in here. And what does that do for me? Two things. One, if this fizzles, comes right back down, I'm out with a very small loss because I got in early. If it works, I'm in early for a big profit. Okay. Oh, GWRE, a best friend? Yes. Whoops. Yes, so we can see what type of pattern it was setting up, especially when they gapped it up, kind of your J-hook pattern. And how the J-hook pattern start? With a best friend signal, a doji gap up. Should be watching the length of a fry pan bottom, or is there no correlation to the size of the move? Usually no correlation, but just kind of a general rule of thumb that the bigger the fry pan bottom is, the more compelling the next price move will be. Okay. I guess that's about it for tonight. Are there any general questions on candlesticks? When you buy options rather than the stock, do you have stricter exit rules than just closing below the T line? Felipe, yes. Something like this. Let's say we own the options and it had a nice break out of the fry pan bottom and then started back. Even though I'm not to the T line yet, because I could project there might be a J-hook pattern setting up, I don't know whether this is going to come back for 3 days, 5 days, 7 days, 10 days. I'll probably be a little bit more apt to take off the calls. Probably I've already got a good profit. Notice how when this broke out, it did it with a kicker signal on the fry pan bottom. But when I get up here, now I've got to take a look at my time and the pattern that is developing. So if I see something like this and I think, oops, I've probably got 2, 3, 4 days before taking it up, that's going to eat up a lot of my time value. That'll probably close out the position. Worst case scenario is it comes over here, I could redo my options. I might come out of the Mays and go over into the Junes, or I might come out of straight calls and figure out a spread strategy over here. Yeah, the T line is the 8 exponential moving average. Hold on to your individual ones, but as long as there's a question on it. Not so much a scoop as it is kind of your next rounding bottom. Supporting off of here, you can see the makings of a trend channel. So your next target would be the top of the trend channel. And what is the relationship between the T-line and the 3T? The further you move away from the T-line, the more relevant the 3T line becomes. So right now, we'd have our stop right here because if it opened lower and came down through there, it was telling me the selling has started. They're coming back below the 3T line, which means they're coming back to the T line. So I want to get you out of the trades a little bit quicker. If you were the only one using candles in the market, would they still work? Yes. Candles are not anything more than the graphic depiction of every buying and selling during a specific time frame. And they aren't anything that would be developed or regulated by your trading. They're out there because human nature works the same way time after time. So, which is the most, consistent indicator in the world. That's why it's been around for 400 years, is that human nature works the same way time after time. So the other side of that coin is people would always ask, well, if 10,000 people or 100,000 people started using candlesticks, wouldn't that negate their effectiveness? And the answer is more than likely. If you could teach 10 or 100,000 people how to use candlesticks, each person has their own trading method or would have their own trading method. And I would say that 90% plus of all investments are based upon some sort of fundamental reason, which means about 10% of all trading is done on a technical basis. And more than likely, 1/10 of 1/10 of 1/10 of 1/10 of 1% are people trading candlesticks. So you could teach 100,000 people how to use candlesticks correctly, and it wouldn't even make a wrinkle in any of the markets. The private message, yes, we're going to have a 2-day training on candlestick or on the T-line this coming Saturday and Sunday from 9 to about 3:30 each day. And essentially it's going to go into how the T-line in conjunction with candlesticks just dramatically improve your analysis of what's happening. Hold on for a second. I'll get the link for signing up and track it down. What is the relationship between the 3 line and that? We did that. You have to watch for slope of the 8 EMA before taking buy if green candle opens above the 8. No. And D, the main criteria for candlestick analysis is the signal. The T line is just a very high probability confirming indicator. So the slope, the slope is going to be based on the pattern or the signal that the candlestick signals illustrated. Exactly, CE. That's why we're watching it. What do we expect coming out of a fry pan bottom? A very strong price move. So the further away we move from the T-line, the more diligent we want to be for watching for a reversal. So very simply stated, if we saw a shooting star tomorrow, we'd be ready to take profits, even though there wasn't a confirmed closing below the T-line, because we're that far away from the T-line that if the signal confirmed, which is the number one priority when you're using candlestick signals, that the logic would be that it's probably coming back down to test the T-line. Oops, here it is. Hold on. That's the link for the 2-day training. That's including with that, including the discount for members. If you're in here as a temporary member, you still get the same thing as a as the member price. If you buy during the day and then sell in pre-market the following day, oh, I don't know. I don't think it is, RC. I think as long as you haven't held it into the next day, it's not a day trade. Let's see. You have a chapter or video on using candlesticks to determine the stop placements? Yes. On our website, if you go up to the top where it says products and services, click on that. We've got about 40 or 50 training videos on all aspects of how to use candlesticks and for stop losses, entry exit, taking profits, scans, how to do the best scans. So that's all available at discount for members. And or what we do quite often is if you don't want to just sit through the video of stop losses, when enough people say, can we do another stop loss session, we do it live on a Wednesday night for an hour, just going through those steps. So we do it live so that if you have a question, it can be answered right there instead of you having to wait to find out what the answer is. And that's one of the things, too, that we're going to be going to, and that's probably an hour session next weekend, using the T-line in conjunction with your stop losses to make them much more accurate. Belt hold on KRNT. When would you buy in? You could be buying right now. Oops, I keep doing that. Because once they did the belt hold and came up through the T-line, I'd definitely be a buyer on positive trading tomorrow, your doji sandwich, which means you're still in this uptrend. And then you use the same criteria. You don't want to see it close back below the T-line. Aren't certain patterns self-fulfilling? When traders see them, they develop and act based upon candlestick formulas? JQ, you got to remember, the people that are using candlesticks on their charts or using them or know how to use them correctly is so minuscule as a percentage of all the traders out there that it doesn't make any effect. So remember, candlestick signals are still kind of the red-headed stepchild of investing. Most people don't know how to use them, so they just stay away from them. The reason I got interested in it was I was a stockbroker for 8 years, realized that the brokerage firms had no more idea of what made prices go up or down. And when I got out of the business, somebody brought candlesticks to me, and the more I studied them, the more sense they made. And so anytime you look at a chart, you can get an explanation for what it's doing just based upon common sense of what usually is investor reaction. Please talk about volume and analysis. I don't see it on your chart. Also, in the case of liquidity, a lot of your stocks have really low volume. Are you not concerned about being able to get a fill to close? Z, my trading universe is stocks greater than 5, because every time I put on a trade, I know I have the probabilities of it moving in my direction. So I want a margin. Usually brokerage firms don't margin stocks less than $5. And my minimum criteria is I want to see at least 200,000 shares traded each day. Now, if I'm trading $1 million account and each position is $100,000, yeah, maybe I move that volume up to 500,000 shares a day. But if I've got a small account that maybe 100 or 150,000 and each position's $10 or $15,000, yeah, 200,000 shares is good volume. So everything you're looking at was based on the universe that I trade off of. All these stocks average more than 200,000 shares a day. Volume is not a concern. A lot of people say, I want to see the volume go up as the price goes up. So I know that people are buying. Price and volume have absolutely nothing to do with each other. If there's good news on a stock and people are buying and nobody's selling, that price will go up on very low volume because they're buying what they can get their hands on. Could you explain where and when you might use trailing stops? Certainly. Anytime I get up into the overbought condition, I start moving my stops up to the previous day's open. So anytime I see something where they're overbought, I have my stop set usually at the previous day's open, because logic says if there's enough strength in the overbought condition to go back down through the previous day's open, the bears have started to take control. For doji cases, you normally say the trend will usually move in the direction. What if the next day the stock starts up, then reverses in opposite direction after 5 or 10 minutes? Then we should count the end of the day. More than likely, I say more than likely, it's just kind of a general rule of thumb, but if you see a doji and it opens positive the next day, it's going to trade positive. Now, when will that not happen? When you're up in the overbought condition, it might open positive and then start trading off. That's where your bearish engulfing signal will start showing up, or your bearish left-right signal, left-right bearish signal. Redheads are my people. Okay. I know, I'm trying not to use, it's like the guy comes into his boss's office and they're talking about colleges, and the guy says, yeah, only whores and football players go to the University of Texas. And the boss says, well, my wife went there. He goes, oh, what position did she play? All right, with that, Jim, go ahead and do the double line. And in 4.1 seconds, do another double line. Oh, TZ, we try to keep it at 2. CUDA. Oops. CUDA, you stay long. Now, if it opens lower tomorrow with the stochastics in the overbought area, yeah, kind of expect a bobble. So if it opens lower, you definitely need to see it trade positive before the end of the day. ATHM, same scenario. All you have to do is stay long as it stays above the T line. And CTLT, that's not what I did. CTLT, just stay long in this one. Notice what happened. Profit taking, and then they started back up. Coming out of a fry pan bottom, you just stay long on this one. An end tap. You can start buying this one. Looks like a little kicker type signal. Buy this one on the basis that it's breaking out. And then just use the T line as your stop. MIME. All you can do here is stay long as it stays above the T line. La Quinta, same scenario. Look for a 45-degree. Same trajectory as that. EAD, stay long. All these uptrending stocks that are staying above the T line, all you have to do is just stay with them until you see a sell signal. Into it, there's that 45-degree. Very simple. Look at the 45 degrees started off the kicker signal. Another one, you just stay long using the T line as a stop. SPN, nothing wildly exciting here yet. You can see how this downtrending channel is still acting as resistance. If you bought this one today and it closed here, it has to open positive tomorrow. If it opens lower, close out the position. There's nothing there on the bullish side. KND, I keep forgetting about this one, but another one that has to open positive. Otherwise, you've got hanging man. This is a perfect example of where do most people buy? They buy exuberantly at the tops. Spinning top, hanging man. Still supported at the T-line, but now we've got a bearish engulfing signal, which tells me they're starting to do some selling up here. If they open it lower tomorrow, you close out the position. Just telling you that that final confirmation of supporting on the T-line is gone. Stay long on this one. Especially, you definitely want to see this one open positive. That's ADI. FMC. Another one you can be buying. There's your little best friend, little doji inverted hammer. Be ready to buy this one on positive trading. Now you might also see your dimple. If it opens lower, you probably come out of it, because what that's telling you is this fry pan bottom, this is the halfway point. From here to here, it's going to be the same from here to here. So you stay out of it until you get out about this area, and then watch for buy signals. Oops. There we go. Oh, FedEx. FedEx, not a very exciting stock either, but it's a slow curve heading in the right direction. So if you like it, you can be buying it. Obviously, you watch to see what happens at the top of this channel. Kyle, you can be buying this one. Might not make a whole lot of money on it. It doesn't look like a big percentage mover, but it looks like it's in this trend channel. So you got about a 10, 15% upside on this one. HBHC, another one that's not very exciting. Let me just make this a little bit smaller yet. You can be buying this one with the anticipation that the consolidation is over, that it could come back up into this area, but you're still only looking at about a maybe a 12% move. Because it's an institutional trader, it's not going to move around all that much or move that much. CMCM, another one you can buy on positive trading. Still not anything real powerful yet, but it needs to break out through this level to get some extra energy to it. NAC, nothing. The fact that they did a big bearish engulfing here and trading down here, the only way, if you're in it, to stay in it is it has to open positive tomorrow. If it opens lower, it's lost all its fizzle. FRBK, another big fry pan bottom. And where does this become relevant? Right there. So if they open this one positive, your little slow curve plus your big fry pan bottom would give you a good good fry pan bottom breakout. STRL, just stay long. Getting a bunch of dojis in here, so if it opened and traded flat tomorrow, I'd close it out. And then I just put a buy stop up here, because if it pops up through here, looks like it's probably waiting for the T-line to catch up, which might mean another 2, 3, 4 days before they intersect. So I wouldn't want to sit there waiting for it, but I would put a buy stop up here that if they popped it in that direction, that J-hook pattern was still working. 10, another one that has to break out through this level. See a very slow curve, but I'd rather pay for it. What was the high today? 1925. I'd rather pay 1950 for it, knowing that it broke out to the upside. Same scenario on this one. If it opened flat, I'd close it out and then just put a buy stop up here. ECA, one of the energy stocks, it's right at a breakout level. You stay long on this one. Now, if it did a bearish Harame tomorrow, I'd probably close out the position. Or did it do that? Open? Nah, it actually did trade lower. So if it opens lower tomorrow, you close it out, because it tells you that this downtrending channel is still dictating whether they can break it out or not. Sienna, stay long. You can see the T-line crunch. You can see how they came back once they broke through the 50. Use the 50 as support. XLNX. If you're long, you stay long. If you're looking to buy it, breaking out through that level. I think that's the one you wanted, right? XLNX. Yes. All right. And TVPT, that's your classic Bobble. Stay long on this one. Anytime you see a setup, the probabilities are going to be much greater in your favor that this Bobble pattern, wave 3, is going to be about the same magnitude. That's why we kept our buy stop on APTI right here, because if it broke out through that level, it told us our J-hook pattern was in progress. I would rather pay up for something knowing that it's moving than trying to bottom fish for something and not know whether they're eventually going to take it up or not. Williams-Sonoma stays short. Got a kicker type signal. Stay short, but obviously watch to see if they take it back down through the 200-day moving average. Avon stays short. You can see how they started selling here, closed below the T-line. Could be coming back here. And again, this is where I'd put my Fibonacci numbers on to see what target might be the next logical target. Once, same scenario. Notice when they took it up today where they topped out, right smack dab on the T-line. First target, I would suspect, is going to be the 50. Again, when they come up through a resistance level, they come back and test it as a support. JD.com, there's that gap up in the overbought condition. That's when you start watching for sell signals. And you stay long until you see a confirmed sell signal. So right now, we've got a dark cloud. I'd put a stop right here. If they traded back down below that level, profit taking has started. Lithium, just stay long. Gapped up through the recent high. NTAP, we did this one. You can be buying this one on positive trading. CVRR, I would suspect is coming back to see if the 50 is going to be acting as support. Navistar, nothing wildly exciting here. If I was going to be buying this one, I'd put a buy stop just above this level, tell me they are breaking out to the upside. Just not real energetic at this point. And MLCO, there's your bearish belt hold. You can be buying this one on positive trading. That would tell you the J-hook pattern is back in effect. Advanced micro, you can stay long. Just continue to use the T-line as your stop. This one's not real energetic either. And micron, same scenario. This has to trade positive tomorrow to stay in it. If I was going to be a buyer, it'd be up here near the $30 area where it's showing it's breaking out. Con is a perfect example of when they kicker signal buy, where you start taking profits when you see a gap up in the overbought condition. So right now, if you started buying back here on the J-hook pattern, or if you started getting back into the position, should have been out the last couple of days, because what did the bearish Harami tell us? The buying had stopped and they aren't going through this level. Right now, it looks like you could start going short on weakness. There's your first target. And then another one where you put the Fibonacci retracement numbers on to see where it might pull back to. And CNAT, stay short. I'd use today's high as a safety stop. If it comes up through there, close out the short position. Wouldn't be a buyer of this one until you see it close above the T line. MGA, stay long. You're in the overbought condition. Put your safety stop right here. Again, this is a case where if you doji in the overbought condition, it has to open positive and trade positive. When it opened positive, I would immediately put my stop right here. If it came back down through there, it was creating your bearish left-right combo. Broadridge, best friend signal, stay long. Broke through this wedge formation. Stay long until you see a sell signal. Salesforce, another one. Well, all you can do is stay long. As long as you can see the T-line's been acting as support, you just stay with it. Data, stay long. J-hook pattern. This is your what we call your message. The doji gap up. But notice it did a dark candle, so that told you there was profit taking immediately. But the message was they gapped it up horrendously. So what do we wait for? We wait to see when the selling has stopped, which is exactly what that bullish Harami told us was happening. And how long do you stay in this one? See how the T-line is the effective support level. Microchip, another one where you just stay long as it stays above the T-line. Constellation Brands, same scenario. Just stay long as it stays above the T-line. V-Ray, you can get ready to buy this one on positive trading tomorrow. You can see the dojis, bullish confirmation above the T-line, breaking this downward trend channel. If it opens positive, you can be buying immediately, and then you just don't let it close back below the 50. Uh-oh. Rob, that might be a lap. VRX, kicker signal gap up. Next target should be right about here, which would coincide with the 200-day moving average. JB, I just don't know what you see here yet. At this point, I would be out of it. I'd put a buy stop just above the high today. That would tell me the fry pan bottom is still working. If you buy the positive open after a doji and it trades back below the doji, would you get out? Yes, if it closed back below the doji. Now, if you have a doji, and it opens positive and you bought it, you close back here, tells you there's no buyers there. You close it right back out. And this is part of that process of where everybody tells you to cut your losses short and let your profits run, but nobody tells you how to do it. Candlestick signals have very simple truisms that tell you when to get right back out of a bad trade. PACB, nothing wildly exciting here yet. You can be buying this one with the idea that it was coming back up to the 50. It probably wouldn't be on my top 10 list, though. Is this the one you're looking for? ETRM. Nice fry pan bottom breakout. That's a good looking chart. Western Digital. Just stay long, but it has to open positive tomorrow to stay in it. If it opens lower, you're starting to see enough sell signals and your stochastics rolling over that's telling you it's time to move on to something else. Bobble. Stay long. Little hanging man. I would just simply have to stop just below the T line. I think we did AXTI, one of the ones that we're still holding, kind of a J-hook pattern after your fry pan, so that's your classic. And ASPS. You can start buying this one. Because if it does move, especially back up in this area or the moving averages, that would be a good almost 50% upside. So that one, sometimes the risk reward, that if you see a good pattern or signal, you might be a little bit more inclined to go with something. Notice we have the McMuffin down here, which is your Morningstar signal followed by a doji sandwich, or your your morning sandwich, which is a McMuffin. If this opens positive tomorrow, you could get some good percent moves on it. Tesla is kind of dead. The fact that it closed below the T line and did a double top with a doji gap down tells you it's probably time to be out of this as far as a long. I don't know whether I'd go short yet, but I wouldn't want to be long. NetEase, slow rounding bottom, looks like kind of a bobble pattern. You can still buy this one on positive trading. Then use the T line as your stop. MTNB. RC, that is a lap. When you say stay long, are there any scenarios where you would be buying also? If I'm saying stay long, it usually means it's moved, and I wouldn't be buying it there. I would, if I owned it, I would just stay with it. There's others where I'll tell you, yes, I'd be a buyer of that one because they haven't started their major move yet. Now this one, there's a left-right combo. There's your doji sandwich. There's your gap up through the 50. You broke this downtrending channel. I wouldn't be afraid to be a buyer of this one on positive trading tomorrow. And NKTR looks like a bullish engulfing signal, maybe missing out by a penny. Stay long on this one. Was there a signal in NPTR, NPTN? Yes. Well, the fact that you had a bobble pattern, and then this right here, without the bobble pattern, is still your doji best friend gap up. So that's what broke it out. Let's see. You say stay long on EAD. Yes, just as long as it stays above the T line. Why not buy? Because you're in the overbought area. You've already moved up this much. Here's what you're looking for. These type of areas to be buying, not up here. Where do most people buy? They buy at the top. What you want to learn is when everything else is negative, bad things being said about the stock or the industry, you're looking for the buy signals. Right now, we wouldn't be long or short Tiffany, just no direction. And BLPH wouldn't be long or short this one. Can't be short because of the price. I'd be someplace else. MGA, stay long. Put your stop right here. NVIDIA, too far extended now. Would you buy now if they open higher tomorrow? Travis, yes, this has already had a pretty good move. However, our anticipation is that it's probably coming back up into the trend channel, up in here around the 150 area. So this one, yes, you could still buy it, but humbug. I'd be much more nimble. There's still probably a lot more upside to this one. Just when you start buying these that have had the big breakouts, you just have to be a little bit more attentive as to what watching for sell signals or at least profit taking. TRM, you could be buying this one on the scoop type pattern. Just watch to see what it does at the 200. Snack. One that you can be buying if it opens positive tomorrow. It's telling you it's going to move positive, which tells you it's also breaking out through the 50. Sears Holding. Looks like you're in a bearish J-hook pattern. Wave 1, wave 2, failing at the 200. Wave 3 should be the same magnitude as this, bringing you down into this area and maybe bringing you back down to fill that gap. J.C. Penney, same scenario. You've got a support level right here. You did kind of a kicker signal. That's not what I wanted to do. Kicker signal, gap down through the support level. Wave 1, wave 2, wave 3. I don't know. You can't short it here because it's below $5, I guess. Micron, nothing wildly exciting here. I'd be more apt to be a buyer up here at this level, knowing that it broke out. It's just having a hard time getting up into that breakout range. No, I think FMSA, you can still be buying this one, but obviously watch to see what it does here at the 50. You've still got a fry pan bottom with a dimple, so that's a little bit more confirming. RC, that's what, remember, we're buying based upon the probabilities. There's times where you can't decipher that if this opened positive here, you wanted to be a buyer, and you saw it back off, pick a place that you don't want it to trade back. Let's say below the previous day's open. So, but the probabilities are that if it's trading positive, it's going to go positive. Now remember, 1/3 of the trades that you're going to do probably will not work. No matter whether you've got the best trading strategy in the world, 1/3 is probably not going to work. So as soon as I realized that told me if I saw something that wasn't working, close it out immediately, move on to something that has the probabilities of 60, 70% of working. Have you done your scans for tomorrow yet? What are the results? Sylvain, no, I haven't. The two that I'm looking at as probables is MGM, J-hook pattern, and GWER, best friend J-hook pattern. Let's see if there's something else. Oh, I might take a look at this one on a positive open just because of the percentile. After the close, I asked you about these stocks that are trading above the upper band channels of Bollinger. I'm not in them, but I'm missing some good positive trading. But am I missing some good positive trading? I mentioned them in here, and you said just stay long for all of them. I want to get in on the action. Should I buy the opens or use the prior day's open as a stop? If easy, if I said buy on positive trading, you can. But a lot of people say, well, should I be buying right here? No, that's already in action. You should be buying something like this right here because of the signal. You should be not buying something here because you're in an overbought area and you're already up a big percentage. You should be looking to when to take profits. So the whole point of candlestick analysis is find out where is it time to be buying. You had a hammer type signal, scoop type J hook, and a doji. Yes, if this opens positive tomorrow, meaning the market is, when you wake up, the pre-market futures are showing the market's going to be up 20 points on the open, and this stock is opening up 12 cents. Yeah, you want to be buying it because that tells you they're probably going to move in that direction. No, LPSN was a buy down here. Now it's a hold until you see a sell signal. Aetna, it's usually not a very fast mover, but you can see you've had a wave 1, wave 2, wave 3. So if you kind of look, see, well, this wave here and this wave here is about the same. Notice when they gapped it up a couple days ago, where were they selling it off to? Right back here to the T line. Now you have a kind of a spinning top doji. And what's that tell us? It's going to be moving in the direction of how they open it. So if they open this lower, might have another move like this. So I'd be ready to take profits on this one if I owned it. PVG, not anything dramatically exciting. Just not a trending chart, but you do have the little doji gap up. So at this point, I would say if you're long, you stay long. I don't know whether I'd be buying it here. Let's see, how many we got here? Do you pay attention to what the stochastics tell you when they are in neither the oversold or overbought? Yeah, if I see something, this is why stochastics up here already, and it's moved already, I probably wouldn't be a buyer of it. Now, the difference between, wow, how come I can't remember the stocks I want to show? Things that I would be watching. Note where your stochastics are on the breakout day. It's in the overbought area. So very simply stated, you want to buy the signals. When the stochastics are in the oversold area, more than likely you're going to be buying the patterns at the breakout. Okay, TZ, we're all tired, so JNUG will be the last one. JNUG has to stay above the T line to stay in it. If it opens lower, your trajectory is going to be fairly bad. Yeah, remember, if you're trading up above the Bollinger Band, it's like trading away from the T line. The probabilities are that it's going to start pulling back. All right, everybody. All right, I gave the weather forecast. It's probably going to be cold and rainy this coming weekend, so you'd be much better off learning how to use the T line. So use that link. I still have the link there. These are sessions where, because they're 2 days and we don't have large numbers of people in, that you can get a lot of your questions answered right away. All right, everybody, have a good evening. We will see you bright and early in the morning. We'll see you then.